Hello, I'm speaking to Chris Houghton, the CEO of Park Group, whose half-year results are just out. Chris, welcome.
Thanks.
Could you start by giving us an overview of what exactly the business is? Because I know that it's changed quite a lot over the years that have passed.
Yeah, the business has been around since 1967 and has evolved into a voucher and prepaid card business. So we produce a gift voucher that can be redeemed at 164 retailers. And we sell that through a Christmas savings mechanism where people pay by instalments over the year to businesses where they're used for sales incentive and staff incentives in the main. And we also sell them direct to the consumer and to corporate customers via websites, the main one being highstreetvouchers.com. The name of the product is the Love to Shop gift voucher and Love to Shop prepaid card under the Flexi Cash brand.
And is that all UK?
The majority of it is UK, but we've also got an operation in Southern Ireland. So we've got a Euro voucher, which we developed in 2011, and we launched Flexi Cash in Southern Ireland in November of last year.
And being, of course, a very seasonal business, what with the focus on Christmas, you usually report a loss in the first half of the year. What are the drivers, do you think, of what we've just had reported?
Well, the business has a level of overhead that is required to support a seasonal business. We've got over 400,000 customers on the Christmas savings side, 7,000 corporate clients through a sales team, and we deal with about 83,000 consumers and 17,000 corporates via their websites. So we've got a level of overhead that supports the business, and that runs throughout the business. The revenue actually is recognised on the Christmas savings in the second half when we dispatch the product, but clearly we're managing those accounts throughout the year. The corporate is less seasonal, but there's still a seasonal bias. So in the first half, we saw the corporate sales increase by over 20%, which was a superb result because it is real growth. Our orders for Christmas 2014 were somewhere between 8 and 9% up this year, so that is, again, a really good result for us. And online sales to businesses were up 30%. So we're seeing a good level of business actually transacted in the first half, but we've got more to come through in the second half when the seasonal peak hits us.
And can you talk in a bit more detail about Flexi Cash and how innovation and new products are playing into the business?
We developed Flexi Cash. It's our own system. We built it based on the principles of our voucher, which we've run since 1982. It links into a retailer's point of sale, so we can control the system itself, so we can develop it and enhance it or change it to meet our customers' requirements. So people can now load themselves via our web applications, via mobile phones, tablets, PCs, which gives us lots of benefits in the corporate market and in the consumer market where people can order things online and get it delivered the next day.
And in the past, there's been some talk of expanding into Europe. How's that going?
We're looking at European expansion. We've started only recently talking to European retailers as well as UK retailers. We've got a number of clients in the UK who have overseas operations, and we've also been talking to overseas businesses that have a need for some of the products that we can offer. So it's early days, but we're getting encouraging results from the research that we've done so far.
And what should an investor be looking out for when it comes to the full year results in a few months' time?
Well, by the time we get to the full year results, we'll have a good idea what's going on for Christmas 2015. We're already taking orders for Christmas 2015, and they're looking encouraging because they're up year on year. So we're seeing a good flow coming through, and we'll be seeing hopefully the corporate business and online businesses continue to grow. That will deliver cash into the business, which is available to pay dividends and develop the business going forward.
Oh yeah, and I noticed there's been a slight change to the dividend policy, or maybe a reversion to how it was. Can you just explain that?
Yeah, historically, and I think many businesses pay a third on the interim and 2/3 on the final. And because I guess of the seasonality of our business, we've been conservative on the interim dividend increase, and we've increased the final once we've known what the final results are going to be. What we've done is taken the opportunity this year to rebalance that, so we've moved back from 25-75 split to a third, 2/3. The underlying increase in dividend on a rebalanced basis is about 4.3%.
Excellent, and congratulations on the results.
Thank you.
If you'd like any more information, please visit the Edison website.